Hello, and thank you for joining us on the Optimal Wealth Podcast, where we discuss creating passive income through real estate. Our mission is to help educate investors on how to grow wealth and invest passively. My name is Jarod Alexander, and I am a passive investor, currently in 6 syndications as a limited partner. I am also the founder of Optimal Equity Group, which is a real estate investment firm that was created primarily to help educate the passive investor. We do that in a couple of different ways. One is we provide education to help give you the confidence to get into the passive investing space. And two, each episode we will interview amazing guests that explore the strategies, insights, and secrets used by successful investors. Whether you're a seasoned investor or just starting out on your real estate journey, this podcast is designed to help give you the confidence and knowledge you need to make informed and profitable decisions. Welcome to another episode of the Optimal Wealth Podcast. I'm your host, Jarod Alexander, and today I'm super excited to have our guest, Domingo Valadez, on the show with us today. And Domingo is the founder of Homebase, a platform designed to streamline deal administration, investor relations, and fundraising for real estate syndications, and currently supports $25 million in assets under management. Domingo, if you could tell us a little bit more. Well, you know what? First, welcome to the show.
Yeah, no, thanks so much for having me, Jarod. Really excited to be here.
Awesome. Well, glad you're here. And one of the things that I didn't read, and I'm going to let Domingo tell us a little bit about this, but I was actually doing a little research on him before we started, and I saw it, his business was actually featured in Yahoo Finance. Domingo, I want you to talk about that a little bit. First, how you got into real estate, a little bit more about your background. Talk about the article, again, published by Yahoo Finance, because that's pretty big. And then also, how you built an investor base of over 3,000 accredited and non-accredited investors.
Yeah, absolutely. I'll start off with what even brought me into the whole real estate space. Be like a story very similar to many. Got introduced to real estate investing through my parents. They were dentists by day, real estate investors by night. And so I grew up going to open houses as a kid. That was how I spent most weekends. A lot of times against my will, but in hindsight, very helpful for my career now. Also, reading the book, Rich Dad, Poor Dad, a very classic one that changes people's trajectory as to, what you see as opportunity and what goals you have for yourself and what's actually attainable. So that was really my foray, into first getting exposed into real estate. Ended up going to Penn, studied finance and real estate there. And, that was really the building blocks for understanding how it works. Ended up working at Google post-graduation. And while I was at Google, did something a bit risky during COVID. It was an emergency time. You had the opportunity of taking out money from your 401k without being penalized because of the emergency situation. And I ended up investing all of that money into a fourplex that we actually developed in 2022. So that was my first foray, actually buying an asset with my own personal funds, developing it with a management company. And now it's actually done quite well in the market that we invested in. And that honestly was a big motivating factor of becoming an entrepreneur and focusing specifically on a prop tech real estate related startup. You asked me why was I featured on Yahoo Finance? Prior to what we're doing now at Homebase, one of our earlier pivots was we built a real estate syndication company where we let people invest in fractional real estate for as little as $100. So the entire thesis there was, can we give people the opportunity to become property owners for the first time with a much lower barrier of entry than what a typical syndication would be when minimums are 25, 50, or if you buy by yourself, it can be hundreds of thousands of dollars. So we ended up doing that. The reason it went viral, there was some crypto involved with the back end of how we fractionalized those assets. And it was one of the very first times it had been done for that specific blockchain. So that's what led to the virality of it. And of course, we sold our very first property, very similar to how most people do their first syndication. A lot of friends and family participating, some anchor investors are a part of that deal. But the second one, we were actually able to do it based off of the investor base that we built. So as you mentioned, we built an investor base of over 3,000 accredited, non-accredited investors. A big piece of that was because our first sale ended up going viral. Just people wrote about it. We got featured in multiple articles, and we got reached out to by a lot of folks who ended up signing up We used to do interviews with every person that signed up on our website. So there was a period of time where we did like hundreds of interviews in a given month between my co-founder Alex and myself. That was so that we established a level of like trust with every single person signing up, but ultimately to understand like why they're signing up, why they want to give like random people on the internet money to invest in real estate on their behalf. And so that's really where you understand like just how many people feel like they'll never own property. So that was really like my first true like working experience allowing and helping other people invest in real estate. And now what we're doing is like having gone through syndicating deals, we learned all the different pain points that you experience from investor management to the hardships that come with fundraising in general. Very stressful, very tight timelines, so many third parties to accounting, compliance. And we built a lot of software for ourselves. And so now what we are is a back office software solution for real estate syndication to help people streamline operations and investor management. So yeah, that's a bit about my story and how ultimately I got to where I am today.
Yeah, thanks for going through that. And there's a lot to unpack there. As you were talking here, I'm sitting here jotting down notes and one of the first things I want to touch on is during COVID, you decided to take all of your 401k money, or most of it, out, go buy a fourplex. And, hindsight, looking at this, it's like, yeah, that was a great move. But during that time, like there was a lot of scarcity, a lot of fear in the marketplace, fear of the unknown, what's going to happen, where are we going with this COVID? Is the economy going to shut down? How long is it going to be shut down? Right. All of this stuff is going through and you had the determination to go out and buy this fourplex. So, I want to kind of go through the line of thinking there. So that would be the one question. And two, if you don't mind sharing with us, so what was the purchase price? Because some people on this show, we tailor a lot to the passive investors that are looking to get involved in syndications and possibly not be as active on the deal. But there are some people that, want to be more hands-on and go ahead and get their first property, and maybe start out with a duplex, fourplex, something like that. So if you could walk us through that purchase, maybe talk about purchase price at that time during 2020, and then how long or how much equity has built up if you still have that property or what you sold it at.
So we ended up acquiring that property for about $500,000. We put about
$100
in McAllen, Texas, very South Texas. And so that's honestly one of the cheapest markets in the US. It's also where we syndicated the two deals where we had like a lot of people crowdfund and invest in it. It's actually done quite well. Like I think both of those deals were hitting around like a 13% IRR in just like 1 year of holding. And that's with fees that we've included, like acquisition fees, realtor fees. So it's really appreciated. And we did some value add to those properties. But in terms of the fourplex that we acquired.
Real quick, and just so I'm clear, the fourplex you bought, was that just your own deal you did yourself, or did you syndicate that?
That was my own deal.
Okay.
Just me personally.
Yeah.
And I had the privilege of like working with my parents on it. And so like we ended up buying land that we then developed and put like we built the fourplex ourselves. And so that was an entire project. Luckily, my parents let the construction, given like they come from having done multiple deals themselves. They've done construction themselves. So it was really just me financing it. Like I underwrote the property and then they were like, okay, we'll handle the operations and we'll actually build everything. Because they live there in South Texas, they're in McAllen. So it was much easier for them to do it. And I feel like a lot of folks, especially if you're early in your career, like if you can leverage your parents to help you with real estate, I feel like a lot of people do it, especially because their parents a lot of times are still in that market, given that's where you grew up. Absolutely do it if you're privileged enough to be able to rely on them to do that. But the asset that I purchased in McAllen, that was about $500,000. We put about $125K down to acquire it. And now, like, I don't think you could, I haven't valued the property in a bit, but you can't buy a fourplex for anything under like $600K right now in the market. And that's minimum. This is a brand new fourplex. So right. I think we'd go above that.
Yeah. No, that's awesome. Yeah, I know we were looking at buying some fourplexes probably right around 2021-ish. And I mean, we're out here in Phoenix, Arizona, so it's, but this is probably a 1970, 1980s build that was going for about 750,000. So, and yeah, and not, I mean, not the greatest area either, right? Yeah. And so, yeah, that's awesome, man. So you did that. That really got your, all right, foot across the threshold in this, real estate world, and you had some help from your parents, which is awesome. And then, so whenever you were syndicating the deals, were y'all mainly focusing on, duplexes, fourplexes, things like that, or single family homes, or were y'all doing 8+ units?
So we were doing single family homes.
Single family.
Okay. Yeah. So the thesis with this was because we were taking such small check sizes, we wanted to make sure we could sell out the deals, especially like we didn't come from a background of syndicating deals. It was always our own capital. Same with my parents. Like it was always their own capital. So we wanted to make sure it could be a property where if we were taking like $500 from folks, we could actually fill the entire round. So the single family deals we were doing were like $250K and the other one was $160K. So definitely much smaller.
How are you structuring these deals?
Very like no pref. It's truly like you're pulling capital together to invest in a property. But because we're doing all of the work ourselves, like as the syndicator, we did take a fee. Like we took like a typical 4% acquisition fee. Okay.
So you weren't doing it like a 506B or anything, because if people are putting $100 in, I would assume a lot of them are non-accredited. Right.
Yeah. So we actually did do them as Reg D 506B. So all 35 slots were taken. Yeah. We had checks anywhere from like 100 to like, I don't know, 10,000 within that slot.
Yeah.
Luckily, we had some anchor investors that were accredited, and some of those people put in like one person put in 50K. So we were able to get most of the way there through the accredited slots. And so then we had the privilege of giving non-accredited people the ability to put in very little, just to say like, hey, I now own real estate, and I've never been able to do that before.
Yeah, because you're just raising the money for the down payment, and you're still getting a loan, right, from the bank. So, $400,000 house, you don't need to raise that much capital, right, just for the down payment, doing 20-25%, right?
Yeah, so these were actually all equity deals. So going back to there was a bit of crypto happening in the background, and so and if you're crowdfunding a single family property, no bank wants to give a loan when you have like 35, 60 members in a very small deal like that. So we did them as all equity. And even with that, we've been able to get pretty good returns in about a year's time, just due to a lot of it due to appreciation. So that's a bit of luck, but also we did some value add to the units as well.
And so are all of these, obviously you can tell I'm really interested in this. Are all of these long-term holds, or do you have some short-term, mid-term?
Yeah. So because we were pivoting our business, so now what we're doing is software.
Yeah.
We may be selling them soon.
Okay.
But like people are pretty happy because we've made a good amount of money on those 2 deals, and it's just operationally like intensive to keep holding them. Yeah. We have to have boots on the ground. Like we have to have a property management company we have to keep in contact with, and that's on our core business now. But like we still learned a lot through the experience, and because the returns look good after a year hold, we feel good saying like we did what we said we were going to do. Like people should be happy with what we're giving back, even though it wasn't like a 3 to 5 years we originally predicted. I think the IRRs that we projected hit that. It just won't be for the full extended 5 years.
Yeah, which is, most investors are good with that, right? So
yep.
Well, I want to highlight a couple things there. For one, I liked, you had mentioned, hey, we do what we say we're going to do, right? Because I think it's very important. That's one of the most important factors in this business when you are investing with a syndicator, operator, right, sponsor, really all the same thing. But is you want them to be a good steward of your money, right? And they talk about the know, like, and trust, and just making sure they're going to do right by you, right? And so, for one, I wanted to hit on that, and two, you don't hear about this. This isn't common what Domingo is talking about, right? And so that's why I'm very intrigued in this conversation. But I just love the creativity, Domingo, because there's no, we make all these excuses, right? Of once I hit this certain dollar amount in the bank account, then I'm going to go invest, or once I do X, then I'm going to go invest in Y. And you don't have to do that, right? I mean, literally, he had people investing with hundreds of dollars to go out and, purchase these properties, these homes. And so you don't need a ton of money. You just got to find somebody that you can trust, right? Obviously, that's not going to run off and go to Cabo and you're never going to see him again. But, that's going to be a good steward of your money. And then that's just going to help walk you through that way. And then you get a peek behind the curtains, you see how this process works. And then as time goes on, and you make more money or, get some of your investment returns back, then you can go and put these into other deals and just really help educate yourself on this type of investing. Again, whether you're being hands-on or, you want to just be completely passive, what we call the mailbox money, right? So anyways, yeah, just you kind of wrap that up. But I'm glad you touched on that. And thanks for walking us through that process, Domingo, because I think that's super creative on what you did. And it's allowed you to, build your software company, right? And let's talk a little bit about that now, Homebase. So, give us, and I know you kind of touched on it a little bit, but just kind of give us the highlights of, okay, now, you've done the syndication model, you've been active as an operator, and now you transition to software because you obviously understand this model, how it works. And so, yeah, what is Homebase? Why does it stand out, to other companies?
Yeah, no, I think the last piece I'll touch on, just like what I learned through that experience syndicating deals, like very, very challenging syndicating deals. So I've grown a lot of empathy for folks that do it. It takes all your mind share. You're consistently thinking about like closing the property, looking at so many different deals to get there. We got very creative with how we got like our financing in place by taking very, very small checks. And our overall thesis was, can we eventually create a more liquid economy for real estate? Because like real estate, like syndications, very similar to like venture investments, they have pretty long hold cycles. You can have anywhere from like 5 to 10 years in a deal before selling out. And there's very little liquidity outside of, your distributions on a quarterly or monthly basis. And so the thesis with the first iteration of our company, Homebase, was, can we create a marketplace for secondary trading of these assets? So our original goal was to create this big portfolio of single family properties where everyone invests a little bit of money, and then eventually you'd have people trading some of those shares. And so going through those deals ourselves was us learning like how the entire process works. And now I think we've since pivoted, and now we're doing more of the software stack that we use internally to first support ourselves. And now we're partnering with different operators, sponsors, and helping them with their own deals, on helping them, with investor management, with accounting, with compliance, with distributions, and like truly making a lot of their headaches much easier to manage. But the long-term vision for what we're building at Homebase is, can we eventually allow for secondary trading of syndication deals to exist? And that's really like where I'm going with this long term. So our goal is to get to like $1 billion, $2 billion in assets under management that we're supporting, and then eventually likely launch a private, and hopefully at some point public REIT. And that REIT would likely invest in a lot of these different deals. And because we actually have a lot of data into how these deals are performing, we can probably choose like what the top 5% of deals are to also invest in. And so then, anyone who's invested in these private deals has now the ability to sell out earlier than they normally would without taking such a big haircut. And then new investors can come in and say like, oh, this asset's now stabilized. I can actually track some of the historical returns, and I can come in. And then as the operator, like it's a huge competitive advantage now to tell your investors, you don't have to wait till the end. You can actually sell out early if you want. And so now you have more options of capital, either people coming in at the very early stages, people coming in at the middle, people coming in at the end. So that's really like the big picture vision of where we're going with Homebase. I mean, so to answer the question of like how are we differentiating ourselves, I think a big piece is we're very vertically focused on just real estate. I think a lot of players in the space have started going horizontal in the sense of, how different is syndicating a real estate deal than syndicating a venture investment or syndicating a different type of investment class? I actually think they're very different. Real estate as an asset class is quite complex. There's a lot of structuring that gets done for these deals. And for there to be a secondary market of trading, like you truly need to be focused on just real estate. And so that's how we're approaching what we're building at Homebase. I can dive into all the details of like the features that we're building to support that, but I don't want to bore anyone listening in. But that's really the vision of where we're going.
Yeah, no, again, thanks for walking us through that. I think you gave us enough information on what it is you do. And if somebody's, if you're looking at, finding out more information, definitely connect with Domingo. And the company is called Homebase. So is it just homebase.com, Domingo, or?
Homebasecre.com.
Homebase CRE. So Homebase Commercial Real Estate, right? .com.
Exactly.
Yep. Awesome. Okay. Love it, man. Yeah. And that was I actually had wrote that down like kind of like a REIT, right? So it's like a fund, essentially. You can invest in and be spread across a lot of multiple different assets, primarily, focused on real estate. So probably, multifamily storage, RV parks, maybe in that realm there. So yeah, no, awesome. Well, and looking forward to seeing the progress on that too, Domingo. And I know we'll be in touch along the way here.
Absolutely.
I'm going to ask you, we're going to go into what's called the fire round now. And to see how we can add some value to the audience here and just share, you've been successful, with the single family, the syndication process, and now starting your own business here. So, very well versed, in these past few years in the real estate market, specifically now commercial, is your focus. So if somebody's just starting out in this space, looking to find out information, books to read, what book would you recommend for investors just starting out? And, we know mindset plays a lot into what we do as well, right? Especially owning your own business. I mean, it's up and down for sure on this entrepreneurial road. What's a great book for cultivating a positive mindset?
Yeah, I mentioned this earlier. I'd say like Rich Dad Poor Dad was such a pivotal book for me personally. I read it as a young kid. Like it truly, I think, changed the trajectory of like how I perceive opportunities, how I would think about like my parents' mindset about how they think about opportunities versus my own. I'd say that was an incredibly helpful book. And then like real estate investing, but also just like careers in general, very personable. Like networking is a big piece of it. And in terms of just mindset, to say like how to make friends and influence people, I'd say like that one to me was also very helpful. Like making sure whenever you're having conversations with folks, like they're mostly speaking about themselves and you're like listening, like very small details like that, I actually think makes a big difference in your own mindset. Cause then like people perceive you better. You have a lot more positive interactions with folks. And I'd say like that rubs off on just like your character overall.
Yeah. No, great books there. And I'm with you. I mean, we hear it a lot, but Rich Dad, Poor Dad definitely changed my outlook on my path, right? Especially financially in my business realm. And it's just, honestly, that can go even to the mindset category too, right? Because it completely changed my whole mindset and of I can own assets, right? And they talk about, the small business owner, the employee, the investor, right? And the different, there's one more. What am I forgetting? Employee, investor, business owner, and the four quadrants. Oh, what is it, Domingo?
I'm gonna be honest, I haven't not read it since I was a kid. I just remember like always comparing, like my dad would say like he couldn't do that, while my rich dad would say like he could do it, and here's how he would do it. And it was really just about changing the framework.
Yeah, it's self-employed.
Got it.
Yeah. So and a lot of times you think, hey, just by owning my own business, right? Like that's going to get me to where I need to go. But if I'm employed in that business, I'm the one doing all the work. That business cannot function without me, right? And anyways, you just learn a lot of different things about the total opposite of what we were taught growing up, essentially. And so, yeah, great great book there. And I liked how you talked about how to win friends and influence people, because essentially, and I'm just going to sum this up here, is I struggle with this. It's like, how can I ask a question and then shut up and listen? Right? That's one of the biggest things is people want to be heard, right? People want to talk about themselves. And, and whenever you engage with them and make them feel like, hey, I hear you, and call them by their names and just simple things. I was actually on a call the other day, just going back to basics. Like we try to get so creative with all these different things, but it's just listening to people, making them feel heard, appreciated, calling them by their name. Right. And he was like, even if it's a long pronounce, like, how do you pronounce your name? And then because so many people just avoid it. Right. And it's just those little things that can make a big difference when you're connecting with others.
100%. I feel like a big mistake people make, and I make this all the time as well, is like you come up with a response in your mind to what someone's saying, and then you stop listening to the new things they're saying because you're like, oh, I can't wait to like respond to that first point they made. Then they made 2 other points, and then you truly didn't listen to them. So the point of truly listening to people, that's how they feel heard and appreciated.
Yep, absolutely. Again, guilty of that as well, right? Next question. Can you share a specific goal or dream that holds special significance to you?
I'd say like one of the biggest goals that I personally have is just like, can I change how an industry operates? That's always been like a goal of mine. That's why when I first started off Homebase, it was a very hard company to build. Learned a lot. Like we made so many mistakes along the way. We didn't change anything, but learned a lot personally and changed a lot about ourselves personally. So hopefully this next iteration, we'll love to change how like real estate operates, make it easier for folks to be able to become property owners. And we have a new path now of getting there. So that to me is like a very specific goal I have. I want to make more people property owners and give them the opportunity to achieve the American dream effectively.
Yeah, no, love it. Love it. I think, what you're doing is big, and can help change a lot of people's lives. Again, just getting their foot in the door, right? And seeing all the different avenues you can invest and how you can invest, right?
Exactly right.
Yeah, I think that'll be huge. So I love that answer. And then if you, because as busy professionals, right, on the entrepreneurial path, especially, I think structuring, our days, and creating a healthy work-life balance and, the morning routines we developed are huge in our success and our growth and, what we're doing in all areas of life. Right. So, so with the third question here, what's, how do you maintain a healthy work-life balance? How do you structure your day to accomplish that?
Yeah, to be super honest, I don't have the healthiest work-life balance right now. Like I'd say Mondays through Sunday, with the exception of Saturday. So Saturday, our team like does not work at all. But the rest of the time, I work most of the day that I'm awake, like most waking hours. I'd say like the things I make sure to do is go to the gym. I try to go to the gym every day if I can, not skip any meals, and try to get at least 6 hours of sleep. I'd say like I really try to stick to those, and then eat healthy. Like if I can, like I'll have a salad every day for lunch. Like I'll make sure to have like chicken for dinner, like nothing too fried. Realizing that like I'm probably straining my body a bit now, but I'm lucky then that I'm younger. I don't have a family yet. Like I do have a partner, and like make sure to devote a lot of time to her outside of work. But realizing like I am younger, so I'm willing to like sacrifice more than like someone maybe who has kids that they very much should be focused a lot more on family and kids because you have more responsibilities now. That's just how life evolves over time. But making sure to prioritize health, wellness, and like relationships.
Yeah. Yeah, great answer. Well, and there's seasons too to what we're doing, right? And right now it's, you're just kind of diving head first into the business and growing that. And, as that develops, then, then it'll look a little different than it does right now, right?
100%.
No, that's cool. And last question here, getting a little deep on you. If you could be remembered for one thing, what would that be?
Yeah, I'd say I have two answers to this because there's two things I like to be remembered by. One specifically for my family, just that like I was a great father, and for my partner that I was a great husband. And then I'd say just in general, I like to be known for like going back to what's the goal that I have. Like I'd love to be able to change how an industry operates. And for me, like very much focus on real estate, at least for now. Can I fundamentally change how real estate transactions are done? How opportunities, can I lower the barrier of entry for people to invest in real estate? Like just something that changes the way it's fundamentally been done. I'd feel very good about that. Yeah.
So making a difference, right? We remember for making a difference, especially in the real estate realm, and the people that don't, have $1 million net worth, right? Giving others the opportunity to get their foot in the door, based on the opportunities that are out there. So I love that. And I did hear remembered as a father. So the plan is to potentially have kids.
Yeah. So plan will be to have kids, and then I'll probably also still not have a great work-life balance, but a lot of that time now will be taken for my kids.
Yeah, well, I can tell you from someone who has kids, it's, you just learn as you go, right? You're not going to be perfect at it, but the biggest thing is you just try to do the best you can and learn from mistakes, because we're gonna make them. But it's pretty cool. I mean, right after this, Domingo, I'm going to coach my son at for t-ball. So,
oh my gosh, that's awesome.
So gonna have a bunch of 4 and 5 year olds running around just trying to keep them contained. It's always fun for sure. Well, hey man, I enjoyed our conversation today. Thanks for walking us through the details and your background and how you've started your business and are developing it too, to really make an impact, which I believe Homebase can definitely do that. And again, look forward to staying in touch with you in the future and seeing the progress there.
Absolutely. No, thanks so much for having me on the show, Jarod. Really appreciate just chatting through, my experiences and what we're doing moving forward, and just for you giving me the opportunity in your platform to share it.
Yeah, absolutely. Well, if you could, Domingo, tell listeners where they can connect with you to learn more.
Absolutely. You can connect with me on LinkedIn just by searching my full name, Domingo Valadez, Valadez. And I'm sure it'll be attached in the show notes, or you could go to our website, homebasecre.com.
Awesome. Thanks, Domingo.
Thanks so much, Jarod.
Thank you for listening to the Optimal Wealth Podcast. If you enjoyed this episode, please be sure to rate, review, subscribe, and pay it forward by sharing with a friend. Most importantly, be sure to optimize your results and take massive action on what you have learned here today. For more, visit optimalequitygroup.com.